Hey, welcome to the Market of the Moment update for the week of June 13th, 2022. Michael Oldham and Chris Madrid with you
What is
here.
up?
What's up?
Man, this
Crazy
year
news.
is flying by for sure.
2022 is flying by very quickly. Maybe it's
So last week we saw, early last week, we saw rates in the 5.5 to 5.8 range, right? Is kind of where they were at. A lot of key inflation information came out. On Friday, CPI came out, which is the Consumer Price Index, and sent the world, good Lord, in a tizzy. So, I mean, we saw, sell off in, mortgage-backed securities. So I guess that here's the biggest difference between the stock market, which is short term, right? And then you have bonds or mortgage-backed securities, which is more long term, right? So anytime there is good or bad information, that's going to either help or hurt one of the markets. Well, because inflation's such a or like I think right now we're hinging on like hyperinflation, right? Which is where it's just everything just costs too much. You can't afford to go out to eat. You can't afford to put gas in your car. You can't afford to buy groceries. Like that's hyperinflation, and we're on the heels of that unless the Fed steps in and kind of pulls the reins back, right? So as of Friday, a lot of key information came out. I mean, causing mortgage rates to tick up significantly on Friday. That didn't slow down on Monday. It didn't slow down on Tuesday. And then yesterday, of course, there was a little bit of information that had come out indicating that the Fed was going to increase the federal funds rate by 75 basis points instead of 50, right? So for the last month, we knew they were going up at least 50. But there was a leak or something that came out that kind of gave the markets an idea that the Fed could be going up 75 basis points, which means that they're taking it a little bit more seriously, right? As far as taking inflation more seriously, wanting to really try to pull back on that. So these are the charts, right? This is a mortgage-backed securities chart. Again, we've touched on, we are definitely in a downward trend on mortgage-backed securities, and we've clearly seen from March and April of this year, when mortgage-backed securities were at their highest point, rates were at their lowest point of the year, right? So now that we've seen mortgage-backed securities drop to their lowest points, which we're seeing June, right? This little ticker on the bottom right says June, and then if we're moving from that date, that June 1st date to now, I mean we can clearly see the activity, the significant activity just in the last 15, 16 days. So that's what this is showing is, again, we're still in a downward trend, which means that rates are still going to continue to rise. But man, thankfully enough, yesterday we had a little bit of a reprieve. So we did get some of the losses that we suffered Friday, Monday, and Tuesday. We got a little bit of that back yesterday. So when that happens, right, when we're watching the mortgage markets and specifically rates and these these key indexes, on days like yesterday, and then even today, we definitely got some back today. We're saying, hey, we need to lock, especially if you're closing the next 2 to 4 weeks, right? And if you're looking to purchase in the next 2 to 3 to 4 months, it still may be a good time to explore locking, especially because again, from what we can tell, rates are going to continue to rise through the rest of the year. Now, we hear the Fed talking about they're going to continue to increase their key rate, which is the federal funds rate that we talked about from yesterday. That doesn't necessarily impact mortgage rates, right? But it does, as as inflation, if inflation doesn't slow down, right, then we'll definitely continue to see mortgage rates move on up. So looking at the charts, talking about mortgage-backed securities, a mortgage-backed security or MBS is an investment similar to a bond that is made up of a bundle of home loans bought from banks that issued them. So where you can go on a Fidelity or a Schwab or Robinhood or whatever you want to buy, and you can purchase a stock or a portion of a stock, right, or crypto or whatever it is. Mortgage-backed securities are similar to where, like from guaranteed rates perspective, we're going to originate, $1 billion in loans that'll get bundled for the month or for a couple week period, and then it gets sold off in the secondary market. So that's essentially what mortgage-backed securities are. Is it's a bundle of home loans that were essentially purchased and then sold off in the secondary market. So talking about mortgage-backed securities, it typically mortgage-backed securities and bonds work similarly, where like the stock market, obviously it's just a little bit of a difference there, again, short-term and long-term investments. So in a nutshell, that's kind of what we're looking at here on the charts, and obviously really in the last 2 or 3 months, just the quick the quick acceleration upward of mortgage rates, and then obviously mortgage-backed securities dropping significantly. So
we want to see interest rates back in the low fours. Where is this chart going to have to be?
Back in the 105, 104 to 105 range.
Okay.
And as of now, right, because we can watch this by the minute. So right now we are at 99.25. I think this was from yesterday. So as of close yesterday, we were at 101.03, right? And we are currently sitting at 99.25. So we've got, there's a lot of.
To get to 104 and 105, what has to happen in the economy, do you believe?
Well, again, the Fed is going to continue to hike the key interest rate, the federal funds rate, right? They're talking about the federal funds rate being 3.5% to 4% by the end of the year. So it won't be immediate, right? It's going to essentially, the Fed is going to put the U.S. economy into recession. They have